Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, another scary day in the market. Not all is lost though. We're going to talk about what's going on and what we can potentially expect over the next week. And we're also going to talk about what the central bankers are doing. They're positioning for a bigger crash to come. We're going to tell you about it. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Bob, what are those sneaky central bankers up to?
Oh, Phil, I think we're caught in another one of these wars without bullets, and just like they typically do, when's enough for them? And so, the bankers enable the government, and the government's going to do this to us. $10.5 trillion in interest payments. And what it's going to do, from a practical standpoint, it's going to crowd out other spending. And so you're going to get in a situation where the creditors are going to be sucking up all the tax revenue from the government, and the government's going to be unable to spend on its priorities or the priorities of the people because they're going to be constrained. And so we're going to end up either being debt slaves, or we have a government that's really, you're paying taxes that are just, you might as well just turn right around and just hand the money to the bank, because the banks are going to hold a lot of this debt on their books, Phil. And at 6%, 7%, and they get the leverage at, 8 to 10 to 1, they're sitting in Fat City.
Right.
In the meantime, this is what they're going to use the money for. Yep, you guessed it. They're buying gold. They are buying gold. So what they're doing is they're handing paper IOUs to you and I, and they're buying physical gold, precious metals. And that's not it. It's not just the war against us, Phil. It's the war I would call the globalist big banks, as you like to call them, the globally significant, whatever that GSIB is.
Yep.
And so we have a situation here where Yellen, she spoke the truth before they slapped her upside the head. And basically, she let it slip that, well, not every bank's going to get protected. And she caused the bank run. The bank run was Janet Yellen. If it was just Silicon Valley Bank, they could have squashed this thing 3 months ago, shored up its balance sheet, squared it away, tucked it away, but they wanted to make a public show trial of this company, and they wanted Yellen to go out there and leak the faux pas. Because what the faux pas does, it transfers all the wealth from this regional banks to the big banks.
Mm-hmm.
And you just have to look at this chart of KRE, which is the regional bank, to see what's happening here, Phil. You want to throw the next chart up? So, Phil, what's happening here is, look at this chart. So that's the dump with Silicon Valley Bank. And then we just been flatlined from there. But you remember the presentation that we did a couple days ago where we said we're at peak deposits for the quarter, and it's now an opportunity for the banks to go through what I would call phase 2 of scare the children. And then no sooner did we post that video on that podcast, an hour later or an hour before that went public, First Republic reported, and they showed that they had $40 billion more deposits flee than they reported. And they're not going to be the last that's going to happen to. And so what you're going to see here probably in the next, between now and July 15th, when deposits start picking back up for the end of the year, I think you're going to see more bank runs happening, or more special things, or more government seizures of financial institutions. So it's going to really get ugly. And I think this is all pre-programmed, but I think what's happening now is just like the movie, The Empire Strikes Back, is we're starting to see people fighting back, with, Anheuser-Busch and Bed Bath & Beyond, but we're going to see it also with the politicians are fighting back. Local politicians are not going to allow, 5 banks, 4 of them located in New York City under the tutelage of Chuck Schumer, to basically run government policy through the banks, unelected bureaucrats doling out who gets loans and who doesn't.
Right.
Against the local politicians who like to have a bank that's controlled within their district. Throwing it to you, what do you think about all that?
No, I think that when they bailed out Silicon Valley Bank, it was a huge mistake, because now you're in a position of darned if you do, darned if you don't, where, and I don't even care if they want to try to concentrate all the banks into the GSIBs, right, which are the big 8. They're too big to fail banks, essentially. And the problem is this. Yellen came in, said, we're going to bail out Silicon Valley Bank. All of the depositors are going to be shored up and insured, even if they're over $250,000. She said she could do that because she has the power to deem whether a bank poses a systemic risk to the system, and therefore can use special powers to override the FDIC limits. Okay, so then whoever you decide to save is basically up to you on your whim. And that creates a problem, because if you're in a regional bank, if you and I are banking in a regional bank and we have a couple $1 million in our accounts, why are we even sitting in those regional banks? Before today closes, we're going to Chase, or we're going to go to JP Morgan. We're going to open up an account, or at Bank of America, wherever, one of those GSIB banks, we're going to open up an account, because we know Yellen said she won't let those fail. So then what happens? Well, now you're going to have people, depositors, sitting in these regionals. They're going to force another bank run, because you don't know who's next, right? If First Republic is going down, they're not going to be the last. And here's the weird part. If Yellen does not save the depositors, and she just says, "Oh well, you're only getting 250. We're not bailing you out for more than that," and everybody takes the L with First Republic, you're going to cause a bank run. All the regionals are toast, because nobody's going to stick around to find out whether or not they have long dated maturity exposure that's now completely underwater, because what exposes those is the bank run. So it's like, he who panics first panics best, as you always say, right? And that's exactly the situation here. So then that brings us to, well, okay, so then they get that consolidation into the bigger banks if you're a conspiracy theorist, and that's what you think they're trying to do. And, maybe that is what they're trying to do. Who am I to say? It sure looks like it. Or you're going to say, to stem the bank run, you're going to say everybody's deposits are back. You're going to create inflationary pressures, because now you're backing trillions upon trillions upon trillions that we don't have, that you would be forced to print if they do have a run on those banks. But either way, if they don't and the banks run, you're going to have to expand your balance sheet, right? Because you have that special window that the banks can tap so that there's no systemic risks. So either way, what they've done with Silicon Valley Bank sets precedents, and you're going to create an inflationary problem with that. And I think they're screwed either way, because they're trying to fight inflation, and I think they're going to create another crash. And that's where you're going to get your pause and your pivot, and it's going to create a recession and hopefully not a depression. But they just ignited the moral risk fire with Silicon Valley Bank, and now they have a real problem on their hands, Bob. And I think, unfortunately, their economy is going to suffer for it.
Yeah, and look, as soon as Janet Yellen starts selling bonds again, it gets thrown onto the bank's balance sheet, and they're going to not lend any money out, because their reserves are going to be out of whack.
Right.
So it's a big problem. And I think the cake's already baked. So, we're really having faith here, meaning we know it's happening. And they can't do anything about it. You can't fix it, just like you said, because whatever policy action they take now has a negative consequence big enough to continue the slide. And so, either they're going to go inflation, deflation, they're going to protect all or protect none, or they're going to play favorites, which is going to cause 178 banks basically would be at risk of folding in that environment. So, it's just going to be one of those things where I think they're going to pull on the string, Phil. I really do. And I think they're going to pull something out and the sweater is going to unravel.
Yeah.
But yeah, hey, and before I let you go, let's talk about what happened with Bitcoin today. Isn't that kind of wild?
Yeah, Bob. So here's the Bitcoin chart. So, I think last we talked, we were going to be in this range here. And then we said, look, we're either going to go to the bottom of the range, or we're going to run up and reclaim the middle of the range and go back to the top. Bitcoin likes its ranges like that. So we kind of got a little bit of both. Yesterday, we started cranking out of that. So I thought, up here, we would poke, our heads above it a little bit here and then potentially pull back in. And then it just did this extra squeeze up towards, almost 30K again. In fact, I think it did touch 30K, which got into this other little bitty range. Then all of a sudden it just rug pulled the entire move. So this entire pump, and we're talking like $3,000 up, $3,000 down stuff here, and just wild rug pull. But I think the problem is, this banking issue is creating systemic problems already. And so that's what I'm blaming this on, because even in the thick of a bull market, if you go back to 2021, I mean, this was some of the stuff that sometimes you would get. And that was peak volatility, peak leverage, peak money flowing. Here we have low levels of liquidity. I don't even think the leverage is that high, but we're just getting very bizarre movements. And I just think, I think it's linked to what's going on with the banks. And that's what's kind of scary, because you don't know to what extent the systemic risks are. And I'm sure there's going to be some exposure to crypto at some point. So on one hand, you could say, well, the people are scared about their bank deposits. And so, well, let's buy crypto, hedge, right? But then at the same time, if that's really what's happening here, this move really should continue on, not just rug pull back down. So we've got some weird things going on. And at the end of the day, if we lose this area, basically, Bob, I think we're going to come back down and retest the 25s, which I think is a legit level. But you still have to kind of be weary of the fact that, if things systemically go wrong here, and I'm talking like back in COVID, Bob, when they had that March and April of 2020, nothing's going to survive, right? It's all going to start breaking, and it's all going to be correlated, and it's all going to start to fall apart. Out of that, though, I think your scenario of where they have to start really backstopping everything, Bitcoin is going to start its march to 100K and beyond, probably ultimately a million, because I don't think they're ever going to stop printing at that point. And I think gold's going to 10K. And I think it happens in a relatively short amount of time, similar to the trajectory we got out of COVID. I don't think gold's going to stop this time, because the new land they're entering into is going to require them to print ad infinitum. They can't stop.
Yeah, I mean, look, the backstop is massive at this point. So they're just going to be plugging holes until they've created so many dollars in the system that they can't help the leak out. Remember the last time we had the leakage that just said wasn't a leakage? Yep. We ended up 3 weeks straight up in the stock market. Yeah, what's fascinating me about Bitcoin, and for guys that don't trade with us, we were musing yesterday. I was telling Phil, market was going down. I said, hey, Phil, it's starting to get a bid. I said, I just joked. I said, I wonder if the banks are not just, because gold was going up too. I said maybe they're buying gold and central banks are throwing on some Bitcoin. And you're like, oh, well, maybe, it might be a little bit thing. It has to cross this range. And next thing I know it, the thing goes totally straight up. And then we're like, well, maybe this thing's going to break out. And I was going to put a chart up for you guys saying, hey, this is the range that Phil put on here. I said, there might be a chance they break the range. And Phil says, well, you might as well delete that chart, because they just Eiffel Towered it right back to where it was. So I just think right now people are on a hair trigger everywhere. And if people just sense any kind of bank run, remember, bank runs can be bail-ins too, guys. So you got to be really, really careful. And what a bail-in is, that you become an involuntary investor in that bank, okay? And that's the last thing you want to be, because you're going to be like Hotel California. You can check in anytime you like, but you can never leave. And I think that's what's going to happen. I think that's going to set the fireworks in motion, that people are going to be scrambling for, what I would call a non-banking related asset. Gold is that asset. It's always been that asset. Bitcoin is that asset too. And then we'll just have to see what alts may go with it. I know for sure if Bitcoin goes, we know there's a whole category of Bitcoin miners that are going to get probably a leverage lift. And we know the gold and silver miners are going to get a lift. And we know the streaming companies, these are the finance companies that finance projects, and they take their payment in the metals in which are being produced. And I think that's where the money's going to be made. And you're not even going to have to look anywhere else. And then obviously energy, as energy goes, if we lose control of the bond market, oil's going higher. So just keep an eye on these things. These things are starting to become a little bit more apparent to us. And I think we're going to see some really, really wild action. Tomorrow, our expectation is, unless your earnings reports really come in bad, is that we should get probably a reversal Thursday into Friday's close, and then, which means close higher, and then we'll probably, this is the stock market, and then probably next week we're going to do a rinse and repeat by trying to push more lows in again. So just it's just going to be really, really bizarre. Look, there's no law that says you have to trade every day, okay? And even if you run a trading service works like we do, there's no law that says I have to give out trade signals if I think this is going to be this kind of crazy. So I just think this is where, hey, if we can get a quick hit on some day trading, we'll try that. But in the meantime, we might as well just keep our powder dry to the extent we can and see if we get a bit of a haircut or a discount to be able to trade later on, maybe in the doldrums of summer where the market kind of lifts.
Yeah, I mean, we just closed, over 100-point S&P short, right? So that's the type of market, I think, where you're just getting in and getting out. And when opportunity sets up, you can get, a larger range or whatever. So come join us, guys. We're doing it every day of the week.
Yeah, it's been an awesome week for us. So we love volatility. We don't necessarily care about long or short. The market's volatile. You'll be able to make money.
Yep, exactly. All right, guys. Well, that's going to do it for this episode. Let us know your thoughts below. Please hit the like and subscribe button and smash that notification bell and set it to all if you can. That really helps us out. We'll see you on the next episode, guys. Thanks for watching. Bye.
Trade Genius.